Hi guys, this is Lee with the Market Sense. This is for the week of January 8th, 2019. Hope everybody had a good holiday and you're ready for 2019. The charts we use in this presentation come to us from the Trade Navigator software, and that's provided by Gettess. And this is a chart of the weekly bond market. Boy, has that sucker gotten exciting lately. Kind of interesting that we've got this much raise in bond rates when the Fed is raising interest rates, which should send bonds lower. But the bond market's got a mind of its own. I think you can see this is pretty excessive here, so it's probably due for a little back off. The fact that they're coming down this week is no surprise. Uh, Trying to find where this back off might go is rather tricky, though, just because the size of the move is so big. They are nearing an area here. Well, let's call this 145.20. In fact, let's call it 45.20 to 45.16. This is about the highest support they could find, and if they're finding support here and turn back up, then wow, is this strong. More likely, I think, is that they come down to the 44 area. The actual moving average is 44.03. That's a possibility, I think. But the difficulty in trying to find these levels is they could come back down to that mid-Keltner channel, which is almost to 142. In fact, it's below 142, 4107. And even if you go way back here off of the lows, this is the last swing high they broke out from, and that's just barely above 139. I don't really expect them to break that far back down, but if they did, well, they'd actually still look okay. They wouldn't necessarily look ugly at that point. So the only thing to do is go down to lower time frames and see how they behave when they get to these areas. No real high probability for any of them, but if they're going to turn right back up this week, this 145.20 area that they're approaching here is the earliest possibility that they could do it from. And if I had to pick one, I would choose this 144 area down here. No guarantee they're going to get there though, and you almost want to let them settle for a week or two and just to see if they don't stabilize and provide a little more clearly defined support and resistance, because they're pretty far flung at this point. Stocks, well, this was kind of exciting too. We had this clear exhaustion week down here, which they did turn back around from, but these exhaustions don't necessarily mean a trend reversal, just a move back up. Well, we've gotten that, and if they were going to hold resistance this week, the 2560 area right in here is about where they should hold. They seem to be working their way above that. Now, that being the case, we're looking at possibly this swing low they broke down from, which is 2607, or even the mid-Keltner channel, which is up around 2683. Both of those are possibilities for resistance this week. And I'm kind of looking for resistance. What I mean by that is this exhaustion bar and the turnaround made a lot of sense, and this could very well be a major low of some degree. But they usually don't sit out here naked like this. We'll usually get some sort of retest, some attempt to go back and try this area. May not get there, but they should at least try at some point. So I'm looking for resistance to come in somewhere in here, if not this week, then the next week or two, to at least make them have a little back off to, well, like I said, to retest this low, even though it may be a significantly higher retest. So that's kind of what I'm looking for. 2560 was a good possibility, but that doesn't seem to be the case. So just above 26 here, 2607 area, or up above 2680 are the two zones I'll be looking for this week. So that's what we've got for you today. I hope you can find something profitable to get yourself into.